All right, I wanted to do a walkthrough of my pairs watch list. I want to mention as an aside, I will be traveling. In fact, when you see this video, I'll already be on my way to the wonderful world of Wall Street. And yeah, so as always, though, I'll try to stay on top of content and keep things lively at Slope. But yeah. Just so as you know, Air Force One is deployed. So these pairs charts are simple. These are just ratio charts. And by way of example, here is Cathie Wood's ARK. This is her main fund, ARKK, divided by the cubes, illustrating on a relative basis how has her fund done versus the cubes. And as you can see, for a while, it was vastly outperforming the cubes up until Feb 2021. It was just, and this explains why the media loved her. And, you know, not only is she a great investor, she's not a guy. Isn't that something? And that all peaked early in 2021. For some reason, you know, some 40 months later, that sort of glow is still around her and she can get on any media she wants, even though over the longer course of time, she sucks. You know, ostensibly she's all about high-tech, transformational investing, but yeah, it's just lame. She's vastly outperformed the cubes. Just eyeballing this, it looks like you would have done twice as well over the period, this entire period, with just plain old cubes as opposed to Ms. Wood. So I offer that first as a bit of snark to Cathie Land, but also just to illustrate a very good, simple example of why it's useful to have these pairs charts, these ratio charts, so you can get an insight that, you know, like plain old ARK may not provide as lucidly. Because here ARK doesn't look that bad, but when you compare it against the cubes, it looks pretty dreadful. All right, on to my normal list. Some of these are a little repetitive because, you know, well, you'll see, but they're still useful. I'll just say a few words about each one. This is the All World Index divided by gold, showing kind of in real dollar terms how worldwide markets are doing. As you can see, gold is, you know, equities are actually valued less and less over the long haul as compared to real money. Added to which, you've got this still very exciting topping pattern going here that may well complete. If it does, it'll be months and months in the future, given the speed it's going. But this is, to me, a very alluring chart. Here's the Dow Jones Composite divided by the, I think the money supply, pretty sure. And it's not so much a real money exercise, but in a way it normalizes the information based upon the money supply out there. And as you can see, we're kind of in the third giant reversal, which is not finished yet. So this was one, this was the second, and then this kind of Easter egg looking fella here. And some of my eggs actually, not my eggs personally, my chicken's eggs actually look like this. But you know, a bull would say, you know, and it's not necessarily false, that looky here is starting to break out of this. That may well be the case. It is possible that the government has so mastered controlling the market that they don't need to follow the rules anymore, and they will basically abort what would have been a tremendous collapse in equity prices. It could happen, but at the moment, it's a big question mark. Nasdaq Composite, also divided by the money supply, obviously doing a lot better, given that it's tech stocks, although compared to the peak of the internet bubble, not quite as high. And so here again, a bull might argue, well, see, it's not as highly valued as it was back then. And there's some merit to that argument too. This one does not exhibit any of the topping behavior of the last one. It would be difficult to argue in any way that this is, you know, about to reverse hard for some reason. It's just kind of cruising along, minding its own business. Here's the Dow Composite divided by gold. This is what I was talking about with respect to the redundancy. But the point still holds that it seems to be hammering out a tremendous top there, which, you know, let's just hypothetically say, let's say it completes here. Well, that's like, you know, next spring, you know, it's like next March. You know, you could You could write a story about that, like, okay, just making this up, say Trump wins and everyone's ecstatic and he gets in there and then all holy hell breaks loose. And by March, the nation's in a catastrophe. That would do the trick, just for example. Or you could put Biden in there, the same thing, whatever. But a few months into the presidency, be it a second term of Biden or a second non-consecutive term of Trump, feces could hit the fan blades. But I'm impatient. I don't want to wait that long. Here's the Dow Jones Composite divided by money supply. This has already escaped, it seems to me. This is already pushed past that top, which is a damn shame. The size of this top was tremendous compared to its predecessors, but it seems to have busted above it. NASDAQ divided by the Russell 2000. This is a clean example, which is no surprise to anybody, about how massively the NASDAQ 100 has outperformed the small caps. Back in, say, 2006, you could not say that. Tech stocks still stunk. And that's completely reversed. We're basically at lifetime highs every day now. NASDAQ's been just killing the small caps. This is the NASDAQ divided by the S&P 500, also killing, although not quite as brutally. And by the way, for you heavy-duty slope charts people, you may wonder, why is it floating way up here above this line? It's doing the best it can. If you zoom in tight, you can see it's anchored to that peak. Once the granularity of time gets a lot cruder, it can't necessarily render the image, but the price level is correct. Russell divided by gold, much more plausible to suggest this is a diamond that's about to break down hard. Semiconductor divided by the Dow Jones Industrial Average, sky high, obviously. And I'm surprised at myself not having I do have an anchor point there, excuse me. It's so high it's not showing. But yeah, lifetime high on that, no surprise at all, thanks to NVIDIA. S&P divided by gold. I've got no markups on this one at all. And doesn't really lend itself to markup, so I'll just leave it raw like that. Here's the SP divided by the money supply. Obviously very high, not quite as high as the peak of the internet bubble. And the Fibonacci's are of questionable merit. In this case, I might just say sayonara to those. Here's an interesting one. This is the equally weighted S&P divided by the S&P, which is just getting hammered, which neatly shows how narrow the rally is. Just a handful of stocks are doing all the heavy lifting. The equally weighted index isn't doing so great. The S&P 500, which is very heavily weighted toward its kings, is doing tremendously. So that's a very cool chart, very subtle way of showing the dreadful breadth. Transports divided by money supply within the confines of the triangle could well fall hard. Oil divided by money supply. This has reached escape velocity. So energy stocks so strong that we even busted above that channel. Pretty impressive. I didn't look at this before. This is very eye-opening. I'm glad we're doing this. CompQ divided by money supply. Meh. It's just kind of cruising along. The formerly known, maybe it still is, the most important chart ever, MICE, the mice chart. Started following this when it was way up there. And, it was helpful in the respect that it kind of predicted in a way the tremendous rise in interest rates. Because what this ratio implies is either falling stock, rising interest rates. The second happened in a big way. The first didn't happen at all. But interest rates have risen so much, it did break this channel. This one I've shown a lot. XME divided by GDX, kind of a pairs trade there. Showing precious metals are probably going to do a lot better than kind of the copper miners and such. This is gold divided by Bitcoin. Mildly interesting. At least it shows gold starting to kind of get its footing and not get completely trounced by Bitcoin. And the final are basically gold divided by, this is the, I think this is the inflation rate, and this is the spider, and this is the US dollar index, all of which I think suggest the gold has a very bright future ahead. And with that, I shall say farewell. I may not do another post until Tuesday morning, but you know me, I always say that, but I usually come out with something. But yeah, it is a holiday, so take it easy. I'll see you on Tuesday.